here we are again. Nifty continuing to fall very strongly and its largest fall since 2021 after the entire global markets crashed. And today we have to talk about it because the mid cap as well as the small cap indices also have fallen considerably. They have entered or at least touched the level of a bear market. So what we'll be understanding from this video is why the market is falling. You need to understand that very deeply in order to get into the next section, which is what could happen to the market, my personal expectations, as well as a general market consensus on what is going to happen. If you're either a trader or an investor, make sure you watch this video because a lot of important government announcements and policies are going to come out very, very soon. So make sure you watch till the very end and to share this with all of your stock market investor friends. So if that's the case, what are you waiting for? This is Ajay Ajith and welcome to Market Feed. So if you're looking at Nifty's chart and its levels, now it is down by nearly 12% from its all-time highs. But I've drawn a very simple, easy line for you to understand where Nifty is considering the pre-election levels. So this was around the time when the Indian election results were announced. I'm sure you'll remember the candle very, very well when Nifty crashed almost 10% intraday. Right? That was the day when this happened. But if you're excluding that one specific candle, what happened was Nifty created a resistance zone around 23,000 levels and it gave a breakout after the election. And we all know what happened. So from this level, Nifty gave a breakout or a movement of more than 13.5% in just a few months. Between June and September, Nifty moved more than 13.5%. Imagine that the annual returns that we project for Nifty as an index is around 13%. It is at this time, in just 4 months of trading, Nifty gave this crazy return. And now Nifty has come back to that crucial level and is consolidating around this zone. But if you're looking at the last 52 weeks, you can see that Nifty is still up by more than 7%. Not great, but not bad for a year where things have not gone well for the market. So let's discuss what all are the things that have not gone well for the market. And here we have two important reasons. We have discussed this before. And the second one is more important than the first. The first reason is FIIs or foreign institutional investors heavily selling in the market. So if you go to the FII DI data in money control, you can see that from October, the foreign institutional investors have been heavy sellers in the market. So October, they sold for more than 1 lakh crore, which was a huge amount at that time. And November, they followed up. December, again, it was a red month. And till now, in the month of January, that is the first 28 days, almost the entire month, FIAs have again sold for more than 79,000 crore rupees. And if you're looking at the daily selling, every single day they're selling except for one day. That is the entire month, foreign institutional investors have been heavily selling in the Indian markets. Now, the second reason is a more important one here. We had discussed this in depth in our aftermarket podcast. So the results, the earnings season of Nifty and Nifty 50 companies have not been great. What does that mean? The Indian companies or the listed Indian companies, they're not able to grow in the way in which they're expected to grow. And you know, the stock market always looks at projected future growth. So if the investors don't see a huge growth in earnings coming in all of these companies, surely their stocks will get beaten down. And something called as a valuation crush will happen. What is that? So if you see that Reliance is going to make a lot of money next year, and a lot of stock market investors have access to this information, next year Reliance is going to make a huge profit. If you believe that, don't you think the stock will start moving today itself? Do you think that the stock will wait for one whole year before it starts moving? No, right? So just with that reason, if the entities or the investors don't believe that Indian companies have the potential to have a lot of revenue and profit growth in the upcoming few years, then yes, their stocks will see a valuation crush. That means they still might grow at a normal pace, but if they are not going to outperform, why will I go ahead and buy the stock? Why shouldn't I look at some other stock which is either listed in the Indian markets or even in the international international markets. Yes, FIAs have access to all of the global markets. Why should they alone look at the Indian markets? That's the concept here. Again, earnings not doing well, hence the expectation that the stocks will not perform over the next 1 to 2 years. That's why they've been heavily hammered down, and you see the downfall in the Indian markets. And along with this, a lot of macroeconomic factors have also played in, which is one is the rupee depreciation. Again, the dollar index or the dollar has been getting very, very strong. Along with this, the US government bonds have been giving an amazing yield of more than 4.7%. So again, if an investor wants to invest in the US market, they're getting amazing returns, which is nearly 4.7 from the US government bonds. At the same time, they're getting the benefit of the dollar strengthening internationally. So no matter where they invest, be it in China, be it in Japan, or be it in India, they are going to lose a lot of money because the dollar is strengthening. I know it's a niche topic here, but I'll give you a podcast link here so that you can understand this in very, very easy terms. But two things that you'll need to watch out here. One is the US Treasury bond yields. You can find it by coming to the trading view. You can type in US 10Y and you can find the US Treasury bond yields. And you can see that their levels are at almost the highest since 2007. So that's really good for the foreign investors, and that's why they're pumping a lot of money into the US Treasury market. And along with this, you can also check out the dollar index. So you can come track the dollar index and you can see that how much is the dollar strengthening or weakening compared to a basket of different currencies. Okay, it is not going to just compare USD INR. You can compare dollar against a basket of different currencies, and whenever the dollar index outperforms, when it becomes very, very strong, emerging markets will tend to underperform. Why? Because at this particular time, whenever this happens, it will be better for investors to keep their money in the US instead of giving it out to emerging markets, right? So that's the concept here. So yes, you understood all the major concepts here, why the Indian markets have been falling, and what are the major things affecting it, and what are all the minor things. Again, there are all the very smaller stuff like HPMV and let's say even DeepSeek AI, which came out this week that crossed the market panic. But all those are just small, very small factors, mostly insignificant. The first two topics are the major ones you should be looking and interested into. After hearing all of this, if you think I'm personally bearish in the market, I would say you're wrong, because I'm personally expecting that the market will move up surely, but I don't know at what pace. So here's what I am thinking about the markets. So first, we'll talk from a very technical analysis perspective. And first, let's talk about risk to reward. So no matter what trade or what investment you're getting into, you cannot always predict the perfect low or the perfect high. But I'll try to give you a very simple way in which I'm thinking. So Nifty is now trading at the 23,000 levels. So from here, the next major support if the market falls after even this 22,760 level is the 21,740 levels. So you can just have a quick look at the chart and agreeing with me? Yes? Okay, let's move ahead. So Nifty has a major support at 21,740, and what is a possible risk to reward if Nifty reverses from here? That's what I want you to think. There is a lot more upside where Nifty, even if it reaches to its nearest swing low of 24,800, it has a 7.5% upside possible. I'm not even talking about the all-time high, which is nearly 14% away. Right? I'm just talking about the nearest swing high. But if you're looking at the possible swing low, it is nearly or under 6% away. Okay, so I would say decent risk to reward for the market to actually stabilize and give a proper up move from here. Now, the second major reason why I think the market is going to move up very, very strongly is that the budget is coming out on February 1st. I know a lot of people are talking about it. And even if you're looking at India VIX, which is the volatility index, you can see it is at its highest level since August because of this very, very one reason. You can see this is the chart of VIX, and around this zone is where the election happened, right? May to June. And around this zone is where the previous budget happened, which is July, right? There was a final budget after the government came into power around this zone. And now if you're looking at the India VIX here, it is crossing more than 18. that is clearly giving an indication that the market is panicking or the market is overthinking what the budget is going to bring in, and everyone is being super cautious about that. And let me tell you some macroeconomic thoughts here. So one, the economic growth has slowed down. The government will be forced to pump in a lot of money into the Indian economy. So if the economy needs to grow, the government needs to be very active in pumping in investments, and they need to bring a lot of foreign investments as well. So as we can clearly see, foreign investors currently are taking a small pause from India. So at this time, the government needs to be very proactive, and I'm sure they will be, because there is no other option. If they want the country to grow, they want or they need to pump in money into the Indian economy. And that's what I feel is going to happen in this budget. They also have gotten a shock from the middle class in the previous election, where they have been questioned. I know the BJP still is in the power, the NDA government is still in the power, but they got a slight reality check where their competitors got a lot more seats than before. And with that reality check, I think the government will be looking at a more people-friendly budget this time around. I'm not even talking about the expected income tax cuts to boost the market. If something like that happens, I'm sure you'll be seeing another version of the Nirmala Sitharaman candle. But I'm just talking about the pure funding into the Indian economy. Are they going to spend more on building new hospitals? Are they going to spend more on the PLI scheme, trying to increase the manufacturing in the country? Are they going to spend more considerably on building highways and networks for all the industries to thrive in the nation? So all this spending will kickstart the economy. So even if you're looking at the 2024 calendar year, you can clearly see that the market was underperforming at a time when the elections were happening, because it was a time where the government spending reduced, and with this reduced government spending, a lot of government contracts, a lot of money flowing into the economy, people not being able to freely buy even FMCG products, that could happen. So the government spending more is always good for the market. A lot more liquidity will be pumped into the market, either directly or even indirectly. Now the next point that I want to discuss here is RBI's new steps to increase or inject more liquidity into the money markets. So we had talked about this in one of our podcasts last week. So here the concept was the rupee is depreciating very fast, and because of this, the foreign investors, are they fleeing from the Indian markets? So whenever the rupee is depreciating, the RBI sells dollars heavily in the open market, and because of this, there is a lack of liquidity in the rupee. Okay, so in order to balance this out, the government or the RBI has now brought in this liquidity booster scheme. They're planning to buy a lot of bonds, including 60,000 crores worth of government bonds. So this will ensure that the banks and the banking system, they're very happy. There's a lot of liquidity in the system, and obviously the market always loves this liquidity. So what all did we discuss here? First, we talked about the technical levels in Nifty. Then we talked about what the budget is very likely to bring and the Nirmala Sitharaman candle along with it. And three, we also talked about the RBI very proactively injecting a lot of liquidity into the money markets in India. So all this is going to give an indirect benefit into the market. Now let me get into the direct benefit that the market is going to see very soon. So if you're looking at the UK market, okay, this is where the UK market is. I'll just this is the daily time frame. It is near its all-time highs. Similarly, if you're looking at Dow Jones or even S&P 500, which is the US market, you can see that it is very clearly near its all-time high. Even with the DeepSeek, even with HPMV, all of that, the market is still near its all-time high. And I truly believe that the Indian markets are also going to follow suit. Why? Because I'll show you the chart of SPX, which is the US market combined with the Indian markets movement over the last 1 year. So you can see that around this time in November, both the markets have performed very similarly. Okay, every dip, every move, except this election day dip, has been very closely mirrored in both the US as well as the Indian markets. And even till here, when the Indian markets hit an all-time high, the US markets also hit an all-time high, but there was a slight correction in the Indian markets, and that caused a sort of a domino fall while the US markets continue to move up. So, if the US markets are remaining strong, I truly believe that the Indian markets also will stabilize from here and they'll start to see a move in the positive direction. This is my personal expectation. I'm not a financial analyst, but I hope you do your own analysis before making any of your investments. So, I'm seeing this as an investment opportunity personally. Again, I would not suggest anyone to go invest all of their net worth or all of their money into the market at this particular point, because as you all know, the market is subject to market risk, and always you have to be prioritizing on safeguarding your capital. So hope you got a lot of value from this video, trying to understand why the market is falling, the possible reasons, or my thought process on why I'm bullish on Nifty. So if you like this video, make sure you hit the like button and get subscribed for more such interesting content. This is Ajay Ajith signing off. See you all again. Bye bye.